Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis. It is good to have you back again. Taking Stock, episode 62. How are you, my friend?
Fantastic. Can't believe you just keep bringing me back. Thank you.
I know, I can't believe it either. The question is, do the people believe it?
Yeah, well, a certain number do.
This might be a deep fake.
Oh, one of those.
It's not even, this is Chuck Gibson, you are Art Jarvis, or is it?
It's just the artificial intelligence, Art Jarvis.
Well, as long as the artificial intelligence, Art Jarvis, presents factual, dynamic economic information and insights, I don't care.
Steve.
However, I can attest to the fact that I am sitting across from the live, real, not a deep fake. It's two things. It's two things this week.
Yes.
Three. I'm going to say the real, not artificial, live version Art Jarvis. But it is Thanksgiving week.
It is.
Happy Thanksgiving to everybody listening in.
Yeah.
Happy Thanksgiving to all of the Jarvis family.
Thank you. Back at you. Happy Thanksgiving.
And that one that she separated and became the Gepfrick family.
That's right.
Which, by the way, how everything's going well with the baby so far?
Knock on wood. She feels great, and blessed. So far, so good, I reckon. So.
Well, then number 3. This is a show that you've seen those flags or signs or whatever. A house divided. This is a show divided for the listeners out there. Yeah, because the live version of Art Jarvis sitting across from me right now is wearing this like red sweatshirt with, I guess if I say it properly, he's wearing this scarlet and gray sweatshirt. And, I was trying to give you a break today. I don't have. And it's Michigan week, Ohio State week, whatever you want to call it. It is the game on Saturday. So you got the show divided with the host of the Maize and Blue and the Scarlet and Gray sitting across from him. So
the biggest game in college football.
It is the game.
That's right.
What else do you have to say?
You can call me and argue with me about that, but it is the game.
I listened to the commentators this past weekend, while I was watching, and the guy kept saying the game. I said, no, that's not proper. It's the game.
Right.
If you're going to say it right. It is the game.
Right.
I wish you the best, but I hope you don't enjoy it too much.
Well, let's put it this way. There's a reason they play the game.
Correct.
And it's usually fairly interesting. So, looking forward to it.
Usually.
Looking forward to it, yeah. But I figured, it's a festive color, and we're heading into the holidays here, and I felt like I should wear a festive color for the podcast. Not that anyone else.
Well, the green of Michigan State would look real good on that red Ohio.
Yeah, I don't think I own anything green.
Well, we're going to have to take care of that when March rolls around and it's time for the St. Patrick's Day. We'll get you the Kelly Green from my fine Irish friend Art Jarvis.
There you go.
You'll be having us.
I do got a pretty good percentage of Irish in me also.
Be making sure you get a shot of the Jameson or at least a pint of the Guinness.
Yeah, some days it might be a pint.
Well, hopefully not a pint of the James.
Pint of the James.
That's a bit much.
Well, let's not judge.
You'll be staggering out of the pool then.
Some days.
All right.
Some weeks, matter of fact, if you want to sashay into the actual show, yeah, some weeks. Let me tell you. So.
Well, anyway, Taking Stock. Welcome back. And for the listeners who have been waiting through the last couple of minutes of this crazy nonsense, happy Thanksgiving once again.
Yep,
as we record this at noontime on Tuesday, we're less than 48 hours away from that great celebration of Thanksgiving. But that's the theme is Thanksgiving. So what in the world of finance do we have to give thanks for as we launch into episode 62?
Well, if we're giving thanks, I'm thankful that we seem to be getting back toward trend, as we kind of spoke about a couple of weeks ago, and a couple of weeks before that, and a couple of weeks before that. Generally, when we look at government shutdown, unless it gets completely crazy, we got the government back open, and they're trying to get things fully functioning again. But the markets have had some pretty good gyrations here over the last couple of weeks. But I do feel like we're kind of starting to get back to the trend we were on before we shut down the government. So if I got to be thankful for something from a market standpoint, that would be what I would be thankful for at the moment. We're heading headlong into the holidays. The numbers, the projecting, like you look at the credit card companies, they're talking about a 20% increase in spending on credit cards. Now that brings up a whole nother topic.
Which for the listeners, I like to give credit where credit's due. That was the projected forecast from Art Jarvis just 2 weeks ago, that the spending was going to increase. We were moving into the holidays, and that's a favorable thing.
Yeah, they're talking about $1 trillion number in holiday spending this holiday, which would be the first time we've hit $1 trillion. So
and after we did the show last time, when we talked about that trillion, which was in reference to somebody and something else, and then boom, because you don't hear that number a lot.
Not too much.
But then boom, right, we talk about it, and then the next thing you know, they're talking about it's going to be the holiday. The holiday number is going to be trillion.
And the interesting thing is back in the 1980s, when I was in college, actually I was probably a senior in college, if I'm not mistaken, or I was in my last year of undergraduate studies, we had $1 trillion of debt. 1 trillion.
Right.
1988. The United States was $1 trillion in debt. Here we are, a few decades later, and we're knocking on the door of 30. We're heading
35 years later.
Yeah, we're at 35 trillion dollars. So it was such a big deal back in 1988 that we were at $1 trillion, and how bad that is for the United States, and how that is not sustainable, and all those kind of things. And here we are at a number that is just exponentially bigger than that $1 trillion number. So I find that interesting, and I still submit there's a breaking point, but honestly, I'm not smart enough to tell you if that's tomorrow or 100 years from now.
Well, here's a win. Here's a win. WHEN question for you. When did the federal government, the United States, first show a debt number?
Cool, that's a great question.
Because you know what, I'm sure, and I don't mean to put you on the spot. If you knew it, I would not have been surprised that you knew it. But at the same time, I'm not disappointed or surprised that you wouldn't know it, because nobody ever talks about it. But here's the point. So let's say in the last 35, might be a couple more than that, but the last 35 years since those 80s when it hit $1 trillion, it has increased to 35 trillion over those 35 years. So about $1 trillion a year. And additionally $1 trillion a year added in debt. Prior to that, it was $1 trillion, and it had taken a lifetime of the federal government of the United States to get to, the entire history of the U.S. federal government spending and, whatever, GDP and whatever, all of that got to $1 trillion in all of that time, but it's been $1 trillion every year since to get to 35 trillion.
Yeah, and especially you look at, 2020, and then we pumped $6 or $7 trillion into the market to try and get the train back on the tracks. And so we went from 20-something trillion to 32 or 33 trillion pretty quickly.
In like the last 5 years.
Yeah, exactly.
6 years or whatever.
Yeah, that's an interesting question, which I will research because now I'm curious. But, there have been times in our history where the United States has carried debt.
Yeah.
But it has been that we've also paid off that debt. You know, you look at maybe a world war and things like that. You go into debt and you ramp things up. But if I was gonna guess, if I had to guess, somewhere in the 60s or 70s is where we kind of started to
first reported a deficit,
and have just kind of continued from that point on.
And to be clear, what it really is it? Do we define it as the first time we were in deficit spending?
No, I think we've been in deficit spending probably multiple times in our history.
Yeah, because sometimes we balance it and sometimes we don't.
Yeah, but I think,
I love that. You and me.
Yeah.
Sometimes we balance the spending for the U.S. and sometimes
yeah, it's all our fault. Yeah. God bless us, and it's all our fault all at the same time.
Yeah.
But it's always just interesting to me that we can't run our households like that. State governments can't run the state like that. Local governments can't own, and yet, boy, we can just go down into the basement and print money like crazy for the federal government. So, and that's, how long can that go on? I mean, I think I will be long gone before that becomes an actual huge problem. But I've said this before, that there was 20-something, 30 years ago, there was a bipartisan group that came together, and this is back when our national debt was way, way lower, probably less than 10 trillion. And they actually came up with a 50-year bipartisan 50-year plan to get rid of the national debt. And that was 50 years, and that's when it was less than 10 trillion in debt. Now here we are three times that number, and now what's 50? What's that plan? What would that plan look like now? 100 and something years, and it's in my mind just completely impossible, because how many administrations and how many Congresses do we go through in 50 to 100 years? To get them to stick to that plan, and but we, again, I'm not that smart, but
it's a unique. We are a unique entity as the United States of America and the federal government, because other nations' leadership doesn't change. Administrations and policies and things don't change every 4 years, right. or in our best case scenario here in the United States, we have a continuity over 8 years with because a president can potentially be reelected for a second consecutive 4-year term, and so we may have a same administration for 8 years while the prime minister of whatever is there for who knows how long.
Right.
I mean, how many presidents has Putin been through?
No.
How many U.S. presidents has Putin been through?
Yes, more than a few.
Right?
And probably has more coming.
Chairman, so China, the Chairman Zhao or whatever, how many federal U.S. administrations has he seen come and go?
Yeah.
And so it's a unique situation, and when you're like, if it's a 50-year plan, how many different leaders are going to have an impact on how that plan is executed or not executed, right? Yeah. So.
Yeah, it becomes has become a beast that is probably going to be very hard to control. So.
A beast.
Yeah, I mean it truly is. I mean it's the amount of debt that we are servicing on a yearly basis. And made worse, as we have discussed in the past, made worse by the fact that we had inflation in 2022 and pushed rates up basically 5-point-something%. So when we were servicing our debt at 1, 2, and 3% on some of the newer debt, now we're servicing debt in that 4 and 5% range, right? And it makes a huge difference. So yeah.
Well, two things are, before I say them, I'll finish your thought on that. You had something you were going to finish the thought, and I interrupted you. I apologize for that. But
yeah, I'm sure it was very noteworthy and very intelligent.
Well,
but it's just when you talk about debt and things like that. we need to put something in place to slow that down. There's no doubt about that. But the problem, you look at the austerity programs in Greece and stuff like that, it's not wanted, right? The things that you have to do to slow this down upset a lot of people, right? You look at Greece, I mean, there's rioting in the streets and things like that because they were actually trying to deal with that problem. And, there were worker strikes and shutting down entire cities and because they didn't like the plan. But the problem is the longer you go, the more painful it's going to be. So it's my 2 cents anyway.
Perfect. Well, again, I'm glad you were able to finish the thought and take us down that path. So the two things. One, so it's been a couple minutes since I asked you that question. When did we first have, reported debt as a federal government nation or federal economy, whatever it meant. And you said, I'm going to do some research. Well, people that are listening did the research, and it's a couple minutes later. So somebody listening right now has the answer to that, Art.
Yeah, good.
They have that answer. If this was live in a call-in show, call in and tell us, but that's not. So you can smile, whoever you are, that you know what it is, whatever year that was. But that was just a fun little note there. But the other thing you just touched on was the inflation.
Yeah.
And so you told me when we were talking before we started to record this episode that we have some sort of an inflation report.
Some sort. Well, we actually got a true blue, full-fledged economic report this morning.
Very good.
And it was the Producer Price Index, which is your wholesale inflation number. And it was actually, you look at the core number, it was actually a little bit better than expected. And it's running at 2.9% for the preceding 12 months. So once again, how I'm okay with that 3% number. So if it went 2.9, 3.1, that works well for me. Okay. Now it's not going to hurt my feelings if we push it down to 2 or lower, but it's a much more reasonable number than it was 3 years ago. Let's put it that way. But so we got that number. So that bodes well for the future, 6 months or whatever. But then the other thing is we also got we here's the problem. Since they shut down the government, we have had spotty and sketchy economic reports. Okay, not even more sketchy than they were before they shut down the government in some cases. But that's an editorial. But
yes, it was.
It's right. It's we were supposed to get a consumer price index number last week. We didn't get it. Right? They don't have the number.
We were gonna chat about that.
Which is interesting to me because it's I'm assuming a big chunk of this now is computerized.
Sure.
So the government's shut down, but I'm assuming the computers can still run. So it's interesting, and there's a certain reporting process.
Well, don't you have to hit that? You got to hit that one program and that one button in the computer that says compile.
There's probably some guy making a couple $100,000 that's in charge.
Compile.
That's right.
Compile results. CPI, please.
Yeah, and with artificial intelligence, that probably takes about 30 seconds now. And so it's interesting to me
you
that
keep throwing that artificial intelligence.
Guess what? It's not going away. We can dedicate a whole episode to that. But so the point is we haven't had reliable numbers for a while now. So from an employment, we actually got a payroll number this morning, and it's not your normal unemployment number or anything like that. It was just kind of a weekly payroll number, which for the last 4 weeks has been declining by about 13,000 jobs per week. That compares to the prior month, it was declining at about 2,500 jobs. So there's been, from that standpoint, there's been a substantial decrease in the amount of jobs being created. Or actually, there's been an increase in the number of jobs dropping off, right? So, but the problem is,
well, so just to clarify, because so that number is indicating a drop off, not a lower rate of growth in jobs, but actually a drop. Existing jobs have fallen.
Precisely.
You know what? It's that AI.
It's the AI. No. But guess what? I don't know if you're aware of this, but we just came off a government shutdown.
I heard something about that.
Right, so maybe there were some payroll.
A government shutdown that lasted way too long.
But they set a record, so they got that going for them. But so I'm very interested in seeing the numbers that are going to be coming out in the future and see how they look. My sense is maybe we have definitely had a slowdown in job creation and things like that. I don't think there's much doubt of that. I just don't think it's as dire as some people are talking about.
Well, if we look at those numbers and we look back to, this is 2025, so we look back at the same period of time in 2024, so that year over year, how does it look?
Yeah.
And my point is this a typical, sadly, as we go into the Christmas holiday season, the Thanksgiving and through the Christmas and New Year holiday season, is it almost normal that jobs are lost?
Actually, no. I mean, with the seasonality of things like that, actually, this is you're more kind of from that October on. That's kind of where you actually see the jobs increase because you're hiring for the holiday season, all that stuff. Exactly. So yeah, that would not, in my opinion, that would not be normal. And then you'll start to see them kind of drop off again after the holidays. But again, I got none of these numbers, unless it's just some crazy number. None of these numbers are reliable enough, in my opinion, that it's going to cause me to change my mind. Again, remember, I look at the trends. I'm not going to take this morning's number and go, oh my goodness. I want to know what the trends are. I want to know where we are from that standpoint. But as always, most importantly, I want to know what the consumer's doing. We talk about this all the time. We'll get another gross domestic product number here and a revision for the third quarter. And I want to see what those numbers look like. The last numbers we were looking at, we were running at 3.3%. On the economy is growing at 3.3%. Do I think we're still growing at that rate? Nope, probably not, but I still think it's a positive number. And I was listening to someone else talk the other day, and they actually brought up the point that we have talked about on numerous occasions, was the fact that how many years have our economists and analysts and things been calling for a recession?
Right.
Well, guess what? At one point, Jerome Powell, the Fed chairman, he felt, I think it was 2023, that the economy was maybe going to grow at 0.1%, and he actually, at some times, thought we might actually slip into a minor recession.
Right.
And not only did we not go up 0.1%, we were up like 2.3%. So complete miss.
Yeah.
So another good example.
So on the Thanksgiving theme, so we are still giving thanks that we have not slipped into recession, despite the fact that over these recent years we did have a huge inflation number that has settled.
Sure.
Yeah.
Yeah, most definitely, and manage that well. But again, the consumer is in it to win it, and they continue to spend money. The big question now is whose money are they spending? So, and I think what you're seeing is, I think the credit card companies have and will continue to. They're ramping up new credit card offers and things like that. Perfect time of the year to do it. You go to the mall, there'll be plenty of people sitting out at a table trying to get you to sign up for a credit card, right? That's nothing new, but yeah.
We still have malls?
I tend not to go to them. My mall involves a computer and Amazon, basically. But I'm not a shopper. Let's put it that way. I'm a buyer.
Well, and we know, and so those same offers you're talking about, like if you went to the brick and mortar shopping mall or shopping store or whatever it is, and those same little kiosks or whatever that are filled with people offering you those. Well, you go online, and guess what? Those things pop up.
Oh, yeah.
So you're not missing anything. You don't need. They're going to bring you those credit card offers right in front of your face on that computer. I'm pointing at my computer monitor here.
Yeah, I see that.
Studio A of Loveland Beacon headquarters. But
here's the interesting part, and we've talked about this before. If I wanted to, I can go online. I can order my groceries from whatever grocery store or whatever I would like to, and guess what? They'll offer to finance my groceries for 4 to 6 months. Are you kidding me right now? Again, that to me is just not a good thing, right? And
I think it's destructive.
Yeah, I mean, and they can say to me, "Hey, Art, you can buy your whatever $200 worth of groceries, and you can finance it and I use the word finance, but typically they're saying, "Hey, if I spend $200 for the next 4 months, you can pay us $50." But again, here's the problem: there's a certain percentage of people that won't pay the $50 every month, and then now not only are they going in the hole from a mortgage standpoint and a credit card standpoint, now they're going in a hole on their groceries. That's just a whole new thing, and that is truly taking us down a road that I think we ought not be going down. So
yeah, that's the road. That's got some twists and turns and hills and valleys in it. That is the holiday season spending too. Some people, they'll spend what they don't have, and they're not really sure how they're going to have it. And you can't. I am with you 100% solidly. Do not finance your groceries.
right.
Because it's just that is a slippery slope.
Yeah, for me that's a hard no.
Honestly, that's a slippery slope that when you get to the bottom of it, ouch.
No, I mean,
I think you make a point. I hadn't even really thought about the fact that not only will some people just won't even make that $50 payment next month. Well, that hurts them ultimately too. But that hurts all of us because the loss is absorbed, and how is it absorbed? Well, the increase because the grocer lost it, the produce. The producer lost it, the grocer lost it, everybody lost it, and now somebody has to pay for it, and that's us, everybody's again.
Yeah, there'll be a certain amount of people that go into default and things like that. Yeah. And here's the other thing, for instance, so maybe I went to the grocery store to buy chicken breast or hamburger, but I see a really good looking New York strip sitting there at the meat counter. Maybe I buy the New York strip because I can finance it for the next 4 months. I mean, it's even as I say those words in my head, it sounds crazy to me.
It does.
Well,
as I hear them, when you say them, it's the same thing. You're not going to find opposition to your thoughts on that here.
Yeah.
I don't even know how to try to say you're nuts, Art. That's why not.
Oh, I'm nuts, but it's
well, thankfully in that realm of groceries, people you do not need to finance. Tell your somebody there are avenues. Here in Loveland, we have the Life Food Pantry.
Right.
For example. So there are places that'll help you. Overall, the Free Store Food Bank. So don't finance your groceries. If you're in a tough spot, go and get some help. Don't they're help you get a leg up through a rough moment or whatever. There's lots of opportunities and people to help. What's the impacting tomorrow?
Impacting tomorrow. I mean, someone mentioned to me that there are about 300 different, I'm going to use the word food pantries, or places to go for assistance, just kind of in our immediate area, or maybe it was the state. Maybe it was the state of Ohio.
Yeah, I can't. Names are slipping my mind right now. But the one in Milford. There's just all around our specific community here in Loveland. And you know what? I would be remiss, and I hope I'm not dropping a shock on you. I can't imagine that you haven't heard it. But while we're here on Taking Stock, which is a production and partnership of Loveland Beacon Digital Media and Jarvis Global Investments. So right here in Loveland, we're based, but we just lost an icon in Loveland.
Yeah.
And so we'd be remiss if we didn't say something, or our deepest sorrow regarding the loss of Peggy Goodwin.
Yeah.
I mean, that's a person that has helped so many and made such a positive difference, and that's a tough loss.
For decades.
Yeah, oh my
Yeah.
gosh, Peggy. She's had her hand. She's left her mark in such a positive way on so many different organizations and things in our community. So we'd be remiss if we didn't mention Peggy.
Yeah, that was a tough one. I heard that one. That's a tough one. She's been a giver around this community for a long time. So hated to see that. So, yeah.
Well, and it's still Thanksgiving week. The theme's Thanksgiving as we come to the closing seconds of this episode number 62 of Taking Stock. Art, I want to say thank you to you, also a giver in our great community. So thank you so much for that on the theme of Thanksgiving. And again, deepest sorrow, peace and blessings to the Peggy's family and extended family and friends. We all already miss her. And we just give thanks for the time that she was here and all that she did that was so good. But a final positive note, you touched on, so some of those numbers were good.
Yeah.
Some things are moving in the right direction, the trends. So the last thing I want to touch on, because we didn't do it. So the S&P 500, Art, we gotta take a minute.
Yes.
To say, it is trending back, right? Since last we talked.
Yeah, within the last 2 weeks, it had dropped down into the 6,500s because everybody was panicking and people started taking profits in, once again, the artificial intelligence stocks and the technology stocks. So you definitely saw a sell-off there, but they have come racing back. But as we sit here, we're at about 6720 on the S&P 500. So we're about 280 points away from that 7,000 number we keep talking about. I'm done projecting when we're going to hit it. So, because every time I do, something else pops up.
There have been a couple twists and turns in that highway on the S&P 500 highway. But anyway, I didn't want to close the show without talking about that favorable trend back upward and moving in that direction toward the 7,000 number. You've still got basically a whole month. You got a whole month to get, if in fact the forecast back on January 1st was we would hit 7,000 by the end of 2025. So you got a whole month to get there, Art.
Well, we'll see what we can do.
And it's good for all of us. So we hope you're right.
Yeah, I mean, I want to get there, but once again, I want to get there in a reasonable way. So, we'll get there. And again, somewhere down the road, we'll be talking about much bigger numbers than 7,000. So, it'll be a blip on the chart. So.
Right? So, hey, well, again, thank you so much for joining us here on episode number 62 of Taking Stock. Thank you for the listeners for joining us here. And to everybody out there, and to you again, Art Jarvis, happy Thanksgiving to you and yours.
Yeah, happy Thanksgiving. Thank you.
You're welcome. And until next time, that is Taking Stock episode number 62.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.